The phones ring non-stop in Citadel's high-rise office. Kenneth C. Griffin stands at the window, staring out at the sprawling city below, his mind racing. A coding error threatens everything. A cascade of AI-driven trades poised to unravel years of work. The tension is palpable, the air thick with anticipation and fear. Can Citadel avert the imminent disaster before it topples their empire? How did Citadel avert a $3 trillion AI sell-off? The year is 2001. Kenneth C. Griffin stands at the helm of his latest creation, Citadel Securities, with a vision to revolutionize the trading world. The markets are bustling, and Griffin's ambition knows no bounds. He has already made a name for himself as a financial prodigy, and now with Citadel Securities, he aims to cement his legacy. Fast forward to 2008. The world is reeling from a financial crisis, but Citadel remains a formidable force. Griffin's firm injects a staggering $1.75 billion into E*TRADE, securing a 20% stake. It's a bold move, one that shows Citadel's influence and Griffin's daring. Yet the same year, Citadel faces a harsh reality, with losses amounting to 50%. The stakes are high, the pressure immense. Despite the setbacks, Citadel's reach extends far and wide. It executes 8% of all trading in United States stocks and dominates 30% of the nation's options trading. For ordinary investors, Citadel is synonymous with opportunity and risk. The firm is a titan, its influence felt in every corner of the market. But behind the scenes, the foundation begins to tremble. The whispers of a looming crisis grow louder, an unseen force threatening to unravel everything Griffin has built. The first crack appears, hinting at a challenge that could change everything. In 2009, the mood inside Citadel Securities shifts as Patrick L. Edspar steps in to replace Rohit D'Souza. The air is charged with expectation, a new chapter unfolding. Citadel is advising on just 4 deals and underwriting a mere 12. But Edspar, with his sharp insight, sees beyond the numbers. He knows that the financial landscape is ripe for transformation. As the years roll on, Citadel becomes a beacon of resilience. By 2020, the world is gripped by the coronavirus pandemic, sending shockwaves through the markets. Volatility is the new norm, and Citadel thrives in chaos. The firm's revenues skyrockets to $4 billion. Griffin's vision of a trading empire is taking shape, fueled by the surge in retail trading. The phones ring incessantly, deals are made, and profits soar. Yet, this success does not come without scrutiny. In the same year, Citadel faces censure from U.S. regulators 7 times, with fines totaling just under $1 million. The accusations are serious: misleading statements, algorithms not internalizing retail orders at the best price. It's a dance with danger, but Citadel weathers the storm, emerging stronger and more determined. In 2021, the narrative takes another twist. An investor lawsuit emerges, alleging Citadel conspired with Robinhood to block trading of meme stocks during the GameStop short squeeze. The world watches as Citadel navigates the controversy, its reputation hanging in the balance. But Griffin's empire stands firm, undeterred by the challenges. By 2022, Citadel makes a bold move, shifting its headquarters from Chicago to Miami. The decision is strategic, a calculated risk designed to position the firm in the heart of a new financial hub. As the year ends, Citadel's revenue hits a staggering $7.5 billion. The firm's influence is undeniable, its reach expansive. But with great power comes greater threats. The horizon darkens as whispers of an impending crisis grow louder. A $25 billion Series B investment in Transfic looms, a venture that could either solidify Citadel's dominance or unravel it. The stakes are higher than ever, the tension mounting. As the new threat approaches, the question remains: can Citadel navigate the storm and avert disaster once more? March 2025. The air in Citadel's conference room is electric. The decision-makers gather around a polished table. eyes glued to the screens flashing numbers and graphs. Citadel has just purchased Paloma Natural Gas for $1 billion, rebranding it as Apex Natural Gas. The acquisition is bold, proof of Citadel's unyielding ambition. But beneath the surface, a storm brews. The whispers have become a roar. A potential $3 trillion AI sell-off looms, threatening to engulf the market in chaos. Citadel's leaders know they stand at the precipice of disaster. The stakes have never been higher. The fear of regulatory scrutiny and potential financial ruin hangs over them like a dark cloud. Citadel's strategy team works tirelessly, their minds racing to avert the crisis. They know that a single misstep could trigger an avalanche. The firm's reputation, its very future, hangs in the balance. The pressure is immense, the clock ticking relentlessly. November 2025, Citadel Securities partners with Fortress to lead a $500 million investment in Ripple. It's a calculated move, one that could stabilize their position amidst the turmoil. The investment is risky but necessary. The decision-makers hold their breath, hoping this will be the lifeline they need. The phones ring incessantly. Each call brings new information, new complications. Citadel's situational awareness deal becomes the linchpin in their strategy. It's a masterstroke, designed to navigate the treacherous waters of increased volatility and regulatory scrutiny. The team knows this is their moment of truth. Monday arrives with a sense of foreboding. Citadel Investment Group announces plans to sell up to $2 billion in senior unsecured debt. The market watches closely, every eye on Citadel. The tension is palpable, the atmosphere charged with anticipation. Inside the conference room, nobody speaks. The decision to proceed with the debt sale is a gamble, a high-stakes bet on the firm's ability to avert disaster. The moment of no return has arrived. As the announcement ripples through the financial world, the Citadel team braces for impact. The room is silent, the weight of their decision settling in. The future is uncertain, the outcome unknown. But one thing is clear: Citadel has made its move. The next chapter awaits. September 2025. The Boston skyline glimmers in the morning light as Citadel announces its new office space atop the South Station Tower. It's a symbol of power, proof of their continued dominance. Yet, beneath this gleaming facade, the financial world trembles. A potential $3 trillion AI sell-off threatens to unravel the market. Inside Citadel's headquarters, the air is tense. The team knows they are on the edge of a precipice. With each passing day, the threat of increased volatility looms larger. They must act decisively to protect their empire. October 2025. Citadel Securities begins an unexpected partnership with small and mid-sized banks. It's a strategic move aimed at expanding their reach and shoring up their defenses. The decision is bold, a calculated risk in a time of uncertainty. Simultaneously, Citadel LLC sets its sights on the European market, announcing plans to acquire German power trading firm Flex Power. The acquisition is ambitious, a step towards diversifying their portfolio amidst the chaos. The phones never stop ringing. Every call brings new challenges, new hurdles to overcome. The team at Citadel knows that time is not on their side. They must navigate the treacherous waters of regulatory scrutiny with precision and care. November 2025. In a daring move, Citadel Securities invests $200 million in cryptocurrency exchange Kraken. The investment is a gamble, a play for stability in a volatile market. Yet it's this very volatility that could either make or break them. As the financial world watches, Citadel's situational awareness deal becomes the cornerstone of their strategy. The team understands that success hinges on their ability to anticipate and adapt to the shifting landscape. The tension is palpable, the stakes higher than ever. Every decision, every move is scrutinized. Citadel's leaders stand firm, determined to avert the looming disaster. And as the year draws to a close, the future remains uncertain. The next chapter awaits, with the promise of both peril and possibility. Citadel's story, through the storm of potential financial chaos, offers a masterclass in strategic agility. The firm faced the specter of a $3 trillion AI sell-off, a threat that could have unraveled markets and shaken the very foundations of global finance. Yet, through a series of calculated moves, Citadel navigated these treacherous waters. The key lay in their ability to anticipate and adapt. By partnering with small and mid-sized banks, Citadel expanded its reach, fortifying its position against market volatility. This was not just a defensive maneuver, but a strategic expansion into new territories, exemplified by their acquisition of FlexPower in Europe. Each decision was a step in a carefully orchestrated dance, balancing risk with opportunity. Citadel's investment in Kraken further illustrated their bold approach. In a volatile market, they chose to embrace the uncertainty, turning potential chaos into a calculated gamble for stability. The lesson here is clear. In the world of high finance, success often hinges on the ability to act decisively in the face of uncertainty, leveraging situational awareness to turn potential disaster into opportunity. As the year closes, Citadel's story continues, with new challenges and opportunities on the horizon. The room is tense, the air thick with anticipation. Citadel's leaders, eyes fixed on the screens, track the shifting numbers. Their situational awareness deal, a masterstroke, stands between them and a $3 trillion AI sell-off. This deal, a lifeline, is the culmination of a strategy built on foresight and adaptability. As the hours tick by, the pressure mounts. Citadel's moves, bold yet calculated, have brought them to this precipice. But the gamble pays off. The sell-off is averted, the markets stabilized. Relief floods the room. Citadel's strategy, proof of their resilience, has succeeded. Stay tuned for the next chapter in Citadel's evolving saga.